Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for August the 20th, 2010. Now, to get started for tonight's trades, we're going to be moving into the futures market, specifically live cattle contracts, the continuous futures contracts. Now, we've got an interesting thing setting up here on these live cattle contracts. Again, we've got a very aggressive move higher here. We can see that these candlesticks are moving up at a very, very fast pace. We've moved all the way from the 92 level, and we're sitting here closing at 99.17. Now, I'm actually going to be recommending a buy position on this, and just to zoom this out, I want to show everybody what's actually happening here. Now, looking at this from a 6-month perspective, we can see that we've got this level in this 99 or 99.50 to 100 area where we have a significant top here. After we've hit this top in this just under this 100 area, the market then retraced, but it came all the way down to about the 89 level. But now here it is. In my opinion, this is a very shallow retracement, and it's already starting to move its way back up. So it's a very interesting setup here looking at this. Now, again, it is overbought, but in my opinion, we can continue to buy this on a dip. Now, our key levels are 94.49, 95.82, and 97.56. So we have our three critical levels of support identified. So stops should be below this 94.49 level. Now, in my opinion, respecting the fact that this retracement was really quite shallow, to be perfectly honest. You know, we're looking at here, this was March, April of 2010. It hit this level. We retraced about $10, and then here it is. We're coming right back up again. So in my opinion, it's a buy on dips, and that's what we're going to do. So looking at going forward for tomorrow, we've closed at 99.17. Let's go into the daily report and see if we can nail this entry down. Again, very aggressive move to buy at these levels. We have 98.06, 99.59. That's our range for tomorrow. My opinion is we buy off this 98.06 area and potentially look for a break of this 100 level. I think it's very possible that this could give way. Now, our 3-day predicted moving average, 97.56, 95.82. These are also potential buy areas. I would buy on this particular contract all the way down to this 94 level, and I would also, to clarify, I would buy above the 101 area. If this thing clears this level where I have this line drawn, we should have a significant break on this. Now, to further demonstrate this, I'm going to correlate this to, you know, the frozen pork belly futures that we were trading months ago. We can see how well that this thing has done. It's gone all the way up into the 140 level. Well, if we look at the correlation between the live cattle and the frozen pork bellies, it's actually very, very high. So to bring everybody's attention to this, if the frozen pork bellies can get into this 140 range, why is it not possible the live cattle could follow and do the exact same thing? So again, we're going to buy this thing on dips, and we're also going to buy it above that 101 area. And it's very possible we could move up towards this 125, 130 area. Very, very aggressive target, but you know, the reality is it's extremely possible. Now, that's our first trade for tonight. Now, for our second trade, we are going to go back into the foreign exchange market. Now, our second trade, we're going to be looking specifically at the US-Canadian pair. We can see that I have these multiple ranges drawn. We've been selling this thing all week. It's a very good trade. Then towards the end of the week this morning, we've got some mediocre data coming out of Canada and the US, forcing the Canadian dollar to soften a little bit. We have the equity sell-off. We have the crude oil moving lower. All of this has a lot to do with end of week profit taking. So we can see that we've ended the day at the 103.90 area. My position is this provides us a good selling opportunity for next week. So we're going to enter into positions tomorrow with a broader look for the move towards next week. So with US Canada, we can see 103.45, 103.50, 103.54. The market's cleared all this area. The triple EMA cross is running flat. So let's go into the daily report. For tomorrow, this is a very interesting day because we're basically trading solely off the daily report, and we're looking to position ourselves for next week. So for tomorrow, we can see that the neural index has turned positive. We have 104.33 as the high and 102.84 as the low. So essentially, we've closed at just under this 104 level. We can see here at 103.90. So anywhere above this 104 area is a very good entry for a short. Expect volatility. It will probably go against us immediately, but we're positioning ourselves again for next week based on those charts. So 104.27, 104.33, that's our target for our entry tomorrow. Stops, we're going to be putting our stops in about the 105.50, 106 area. Now again, looking at this chart is very clear where it shows that US Canadian dollar is in a very, very bearish downtrend here. So we want to capitalize on this end of week correction or what have you and use that to our advantage for next week to set short positions. So those are the market positions for August the 20th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.